A lot of news channels, I think, incorrectly report that we are the largest derivatives market in the world. Discussion that we are the largest derivatives market is extremely misplaced. It's been misplaced from the start. We were never close to US. We are under of the US overall, comparing all asset classes. FY25 में जो retail losses हुए हैं वो 1,05,000 crores के हुए. 6-7,000 crores is what a fund can potentially offload and result in Nifty moving by 1%. Just 6-7,000 crores. And even 5% of the FIIs sort of want to square off their positions. Now 5% of 75 lakhs is 3.75 lakhs. And I just discussed that you can only offload 6-7,000 crores to create a 1% move in Nifty. So just understand how many times it is 6-7,000 crores it is.
हाय मयंक, वेलकम बैक। इनफैक्ट लास्ट टाइम हमने जो कॉन्वर्सेशन की थी, जो इंडियन मार्केट में मैनिपुलेशन हो रहा था, जेन स्ट्रीट का कैसे मैनिपुलेशन हो रहा था, आपने डेटा के साथ बताया। एंड थैंकफुली सेबी टुक एक्शन, दे बैन जेन स्ट्रीट एंड दिस वाज कवर्ड ओवरऑल एंड यू वर द फोरफ्रंट ऑफ दिस। नाउ द बिगर चैलेंज विच वी एज ट्रेडर्स एंड ओवरऑल मार्केट इज फेसिंग इज ये जो बातें हो रही है कि वीकली एक्सपायरीज हटाई जाएगी। टू जस्ट सेट कॉन्टेक्स्ट की अगर हम देखें तो हमारी जो डेरिवेटिव्स मार्केट की ग्रोथ है दैट हैज हैपेंड व्हेन वी मूव टुवर्ड्स वीकली। एंड ग्लोबली भी हम देखें ऑल बेसिकली जो भी ग्लोबल एक्सचेंजेस है सब एक्सपायरीज उनकी शॉर्टर टेन्योर की है। बट अब हम ऐसा एक्शन लेना चाह रहे हैं कि हम वीकलीज को हटाएंगे एंड जो नैरेटिव बोला जाता है कि रिटेलर्स के लॉसेस हो रहे हैं, वी वांट टू प्रोटेक्ट द रिटेलर। सो आई वांट टू हियर फ्रॉम यू। सो आज हम डिस्कस इस पे करना चाहते हैं कि इसके क्या इंप्लीकेशंस आ सकते हैं। If not this, what is the alternate solution? And just compare globally कैसा होता है and क्या एक best solution है कि retailer का interest भी protect हो, regulator is also happy and trader community and overall market, if we compare from a global perspective, also we are seen in better books.
Thank you, Saurabh. Thank you for having me. And yes, this is a major issue, sort of a major regulatory development which is happening, and one which needs an overarching perspective. So I'll just sort of lay down my different points. So firstly, I think this would overall be a regressive step for India. I'm talking from the point of view of multiple facets of liquidity in Indian market. So I think this would be a step back, and whatever concerns FinMin and SEBI has can be addressed, by investor suitability, and they're better addressed by investor suitability.
So you are saying this is a regressive step, right? कि weeklies को हटाना itself is going a step backward. So
Yes,
why is
yes.
that so? मतलब क्यों आप ऐसा क्यों बोल रहे हैं?
So if you see, India's cash market is very shallow, and in case you remove derivatives also now, then that becomes a double whammy. You don't have liquidity either in the cash segment and the derivative segment, which was liquid. You're removing liquidity in that. So just to sort of set some context, in India's cash market, the daily traded volume is around 1.1 lakh crores. Okay, now it's only around 1.1 lakh crores. If I compare this number to US, this is around 55 lakh crores, in fact, 55 lakh crores. So it is 50x. Okay, it's 50x. Even after adjusting for market capitalization, which is around 4.5 trillion for India and 62 trillion for the US, it is still around 3.6x. मतलब जो यूएस की डेली ट्रेडेड वॉल्यूम्स है adjusted for market capitalization, वैसे तो 50x है, but adjusted for market capitalization, they are still 3.6x. Okay. Now it's been observed that, and again, referring to some of my earlier points, it's been observed that from prior sort of podcasts, it's been observed that in 6-7,000 crores, in case you buy or sell Nifty by 6-7,000 crores, Nifty moves by 1%.
Yes.
Okay, that is it. So 6-7,000 crores is what a fund can potentially offload and result in Nifty moving by 1%. Just 6-7,000 crores. Now, if you compare the AUMs of FIIs, foreign institutional investors, that is 75 lakh crores. Even the MFs, even the Indian MFs have cumulatively 75 lakh crores of AUM. The
Okay.
overall, just to once again put things in context, the overall market capitalization of India is 400 lakh crores. Okay,
Hmm.
75 lakh crores is FIs, 75 lakh crores is Indian AMCs. Okay, now let's hypothetically say that uh, the FIIs feel that the valuations are stretched. This happened. This keeps happening, by the way, in Indian markets and in any market actually. So FIIs feel that valuations are stretched, and even 5% of the FIIs sort of want to square off their positions. Now, 5% of 75 lakhs is 3.75 lakhs, right? It is 3.75 lakhs. And I just discussed that you can only offload 6-7 thousand crores to create a 1% move in Nifty. So just understand how many times it is 6-7 crores it is. Okay, so because the cash market is so illiquid, it is for this reason that you see that when FI sell 40-45 thousand crores in a month, not on a single day, in a
हाँ.
month, the market falls 3 to 4%. 40-45 thousand crores in a month. Now I'm talking about 3.75 lakhs being squared off. Which is again just 5% of FIA. 5%. अब एक दिन में तो वो ले ही नहीं सकता. Market would tank 25%. I don't know how much. Even across months, even across weeks, it is difficult to offload just 5% of the event.
ओके, सो मयंक आप ये बोलना चाह रहे हैं कि बिकॉज ऑफ द वीकली एक्सपायरीज द एफआईआईज ऑल द एएमसीज बेसिकली कैन hedge the market if they are seeing any risk, so they don't
Yes,
actually
yes,
need to
yes,
offload but they can hedge their exposure, and this basically like does not crash the markets.
yes, 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 exactly. So what they can do, like the derivative segment is liquid, right? So they can buy puts and sell calls. Now they've hedged their exposure entirely. Completely वो hedged है. Now if the market, let's say the valuations were stretched and the valuations correct now. Okay, now what happens is that their NAVs don't drop. Since their NAVs don't drop, they are not forced to sell cash. Since they are not forced to sell cash, the market does not further fall. The cash market is illiquid. उन्होंने अगर वो 3.75 लाख करोड़ का कुछ भी प्रपोज मतलब वो खुद ही 5% है, उसका उसका कुछ सेल रिडेम्पशन आने लग गए तो उन्हें दे हैव टू फोर्सफुली सेल. वो सेल होने लग गया तो मार्केट क्रैश करेगा.
Okay.
अब वो मार्केट क्रैश करेगा तो इट्स वर्स फॉर इंडिया बिकॉज द करेक्शंस इन इंडियन मार्केट्स बिकम डीपर.
Okay.
And all of this is bad. So once they've hedged, right, then what happens is that their NAVs don't fall as much when the valuations correct. जब मार्केट नीचे आते हैं उनके NAV गिरते नहीं है, उनके रिडेम्पशन आते नहीं है, उनके रिडेम्पशन आते नहीं तो उन्हें कैश बेचना नहीं पड़ता. और जब लोअर वैल्यूएशंस आई तो वो अपने हेज जो उन्होंने फॉरवर्ड सेल किए हैं, लॉन्ग पुट शॉर्ट कॉल, वो स्क्वायर ऑफ कर सकते हैं. तो उनको एडिशनल अल्फा भी क्रिएट हो गया फ्रॉम द इंडियन ज्योग्राफी. The best way to create alpha is to sit on cash when valuations are high. And there is no way to do that in the cash segment actually, because कैश तो ले ही नहीं सकता, वो कैसे करेंगे? तो वो
Yes.
डेरिवेटिव से हेज कर सकते हैं और फिर वो जब नीचे आए तो अपने हेज को अनवाइंड कर सकते हैं, sort of enter again at higher valuations, which generates alpha, which then makes India an attractive proposition compared to other geographies which already have weeklies. तो
मैं
ये पूरा एक वर्चुअस साइकिल है.
नो आई एम अंडरस्टैंडिंग दिस, बट इसका वीकलीज एंड वीकली से इफ यू मूव टू ईदर अ बाई वीकली या मंथली, what kind of implication does that have on the FIIs or people who are holding cash? Because आपने एक वैलिड पॉइंट बताया कि जब मार्केट ओवरस्ट्रेच्ड है, because these FIIs and like the big funds are holding such big AUM कि उनके लिए पॉसिबल नहीं है कि एंटर एग्जिट करें, सो वो टाइम पे अपने आप वो एक्सपोजर हेज कर लेते हैं. बट अगर यही चीज बाई वीकली में करे या मंथली में करे वर्सेस दे आर डूइंग इन वीकली, व्हाट इज द इम्पैक्ट ऑन आवर ओवरऑल मार्केट?
Yeah, so if you see, 3 lakh crores, trying to be squared off, that is just understand that is 12 crore Nifty forwards. That is 12 crore Nifty forwards. Monthlies have never had that kind of volume.
ओके.
If you see the monthly volumes now, 12 crore forwards. If you like, just to set context, the average daily traded volume in futures, Nifty futures is around 90 lakhs to 1 crore. They
ओके.
have to sell 12 crore Nifty forwards. It's so monthlies don't have that liquidity. In fact, even if they use, even if they try to do this across one entire week, monthlies won't offer the liquidity to be able to hedge 3 lakh crores worth of exposure, which is why you need a liquid derivatives market. It is because you want to facilitate this entry exit. And exiting and entering at lower valuations has significant alpha associated with it. And monthlies, the longer you have tenors, see, longer tenors are anyway there in US, in other geographies, but they are not liquid. So the demand or the interest of all multiple participants is there in shorter tenors, and that liquidity is a facet. It's a big attribute and a desirable attribute because it gives funds, and not only FIs, even Indian AMCs. Indian AMCs actually rarely use sort of options to hedge because they can't sell calls on index. They can only buy puts on index. Now, in case you are repeatedly buying puts, then it costs you a premium. You can't sell a zero cost forward. That is a regulation that can possibly change in the future. It might change once they're allowed to sell calls as well on the index. Let's say some AMC has a mutual fund as a Nestle, a Britannia, Sun Pharma, Reliance, maybe ONGC, maybe ITC, maybe some auto stock. Okay, now that is broadly a representation of Nifty. I mean, he might have chosen the stocks, but by and large, the combined sectors are a representation of Nifty, and they can buy puts and hedge. Currently, buying puts is allowed, but for Indian MFs, they're not allowed to sell calls on index. Okay, so now that is a reason why Indian MFs are not very active in the option segment, but FIs have no such restriction. So in the future, if Indian MFs are allowed to sell calls, then they will also construct zero cost forwards and sort of hedge. In fact, it happened. So if you notice, if you recall about 1.5 years back, I think S. Narain had pointed out that small cap valuations were too stretched. Now
Hmm.
Indian AMCs who are in the mid cap and small cap segment have no way to get out. They can't reduce exposure. What will they do? I mean, you need a liquid derivatives market. Firstly, the regulation needs to change, and then the liquidity also needs to be there. For FIs, the regulation is already, I mean, it allows them to sell calls along with buying puts. So they can construct the forwards. Indian AMCs, unfortunately, can only buy puts, which limits their participation in the option space.
Okay, man. So basically, the major point you're making is कि liquidity and overall depth of the market will be affected. Other
Hmm.
than this, आपके पास कुछ और additional points है to support this? Any data point you would like to share with me?
Yeah, I just shared. I'll just share. Thank you for actually, um, asking me this. Yeah, this is what I've covered. This is the daily cash volumes in India and US. And once again, it's also been adjusted for market capitalization. So you can see it's 3.6x. It's around 30 bips of market cap traded in Indian equities daily versus 1% of market cap traded in the US. And yeah, different funds have different AUMs. ICICI Bank, for instance, has 7 lakh crores of AUM. Now, how does it, let's say, it feels that market is at highs and valuations are stretched, it has to square off 3 lakh crores. How does it do that? 40%, that's still 40% only. It's not its entire book. It's 40% of its AUM. There is no way to do it. In case, still, actually, as I had said before, Indian AMCs rarely use derivatives because they're not allowed to sell calls. They're only allowed to buy puts, which cost them premium. And repeated premiums sort of has a cost associated with it. This is the virtuous cycle that I was talking about. What I've also mentioned is that 12 crore Nifty forwards, which is 3 lakh crores of, 12 crores of Nifty forwards, which is 3 lakh crores of AUM, is not possible in monthlies or even bi-weeklies actually. Even in weeklies, actually, it is still, it's not possible on a single day. To sell 12 crore Nifty forwards, it's definitely not possible on a single day. And even in weeklies, you'll need to spread it across multiple days with the current volumes.
Okay, so basically liquidity is something which will be affected. But Mike, I generally keep hearing कि we are the largest derivatives market in the world. But what data you're presenting, I think that is only true in terms of the number of contracts traded, but in terms of volumes, we are still lacking much behind.
Yeah. So that is a myth which conclusively needs to be busted. Uh, we are definitely not. So a lot of news channels, I think, incorrectly report that we are the largest derivatives market in the world. They often mention though that it is in terms of number of contracts traded. Okay, now number of contracts traded is not the way to look at it. Like you have to see the premium traded in the market. just for illustration, let's say we have a bullock with 100 1 rupee coins versus a 1 billion USD check. Then there is no question, right, that the 1 billion USD check is larger than the 100 1 rupee coins that is there in the bullock. तो वो तो कोई दैट इज नो मेट्रिक कि हमारे कॉन्ट्रैक्ट ज्यादा ट्रेड होते हैं. आपको ये देखना है कि आपका प्रीमियम ट्रेडेड कितना है, ऑप्शंस प्रीमियम कितना ट्रेड हो रहा है. और वहां पे अगर मैं इंडिया के डेरिवेटिव्स मार्केट को देखूं कंपेयर टू लेट्स से इंडियन इक्विटी डेरिवेटिव्स, केवल इक्विटी डेरिवेटिव्स की बात करते हैं, अगर मैं इक्विटी डेरिवेटिव्स को देखूं वर्सेस यूएस इक्विटी डेरिवेटिव्स, we are only 24% of the premium trade. It's something that I present here also. So this is the number of contracts traded per month in India and US. It's in crores. So 1325 crore contracts per month. This is the difference in contract size. Okay, now US contracts, India का typical, I'm comparing standard Nifty contracts and standard S&P 500 contracts. India का जो contract size है वो 6.25 लाख का था. I'm talking about pre November 24. जब क्योंकि generally जो लोग discuss करते हैं कि इंडिया का largest derivative market है, वो they are referring to data pre November 24. So before the lot size increased. So इंडिया का जो lot size है वो 6.25 लाख का है. वही जो यूएस का है वो 5.25 करोड़ का है. तो मतलब कोई मुकाबला ही नहीं है कॉन्ट्रैक्ट साइजेस में. तो नंबर ऑफ कॉन्ट्रैक्ट्स तो हो सकते हैं हमारे ज्यादा हो और ज्यादा हैं भी, बट वो कोई तरीका नहीं है क्योंकि हमारा कॉन्ट्रैक्ट साइज ही बहुत छोटा है. हमें देखना है प्रीमियम ट्रेडेड से. तो यहाँ पे आप देखेंगे कि इंडिया बहुत कम है, 25% से भी कम है. और मैं अभी केवल इंडिया के डेरिवेटिव सेगमेंट, इंडिया के इक्विटी डेरिवेटिव सेगमेंट की बात कर रहा हूँ. अगर इसमें मैं यूएस में फॉर इंस्टेंस रेट्स मार्केट बहुत ही बड़ा है. यूएस का रेट्स मार्केट 10 ईयर ट्रेजरीज, 2 ईयर ट्रेजरीज, 30 ईयर ट्रेजरी, ये बहुत डीप मार्केट्स हैं. यूएस का स्वॉप्स मार्केट बहुत डीप है, उसमें भी ऑप्शंस होते हैं, स्वॉप्शंस उन्हें कहते हैं. देन देयर आर ऑप्शंस ऑन करेंसीज व्हिच इज अगेन अ वेरी वेरी डीप मार्केट.
Yes.
So if I combine all these, if I combine the entire India geography and compare it to the US geography, then our premium traded is actually less than 5% of US premium. So we are nowhere close to being the largest. Even within equity derivatives, specifically, we are still only around one fourth of the US market. So this entire discussion that we are the largest derivatives market is extremely misplaced. It's been misplaced from the start. We were never close to US. We are under 5% of the US overall, comparing all asset classes. अभी मैं ऑयल ले भी नहीं रहा, वो सब भी यूएस में बहुत ज्यादा है. तो 5% के भी वो नीचे है, मतलब काफी नीचे होंगे उससे भी. सो एन इक्विटी आई मेंशनड इट्स अराउंड 25%. तो ये है.
मयंक, बेसिकली आपने अभी मेंशन किया था करेंसी मार्केट्स एंड व्हाट लाइक जो आरबीआई ने एक्शन लिया था करेंसी मार्केट्स में कि यू कैन नॉट स्पेक्यूलेट, यू कैन ओनली हेज योर एक्सपोजर, एंड दैट इवेंचुअली किल्ड द एंटायर करेंसी मार्केट. सो
यस यस यस,
आपको
यू डिड अ
लगता
वेरी
है
वैलिड पॉइंट.
ऐसा कुछ एक्शन से वी कैन सी not exactly killing but like volume reducing drastically across the expiries, because traders are someone जो liquidity लेके आते हैं market में, and without them like FIIs also won't be able to hedge their exposure. traders जो liquidity provide करते हैं वो भी कम करना चालू कर देंगे. so कुछ आपको ऐसा एक impact आता है और any regulatory impact अगर इसके वजह से ऐसा कुछ होता है तो?
So see, USD INR. So firstly, I think what often happens is that uh, speculation is painted in a very negative light, and that is incorrect. Basically, speculators are an absolutely critical part of market microstructure. You can't have a market in which I'll just sort of change the slide. You can't have a market in which you only have hedgers. स्पेकुलेटर्स सर्व एज काउंटर पार्टी टू द हेजर्स इफेक्टिवली. तो ऐसा नहीं हो सकता कि हेजर्स ही ट्रेडिंग कर रहे हैं और उस मार्केट में वॉल्यूम हो. उसमें कोई वॉल्यूम नहीं होगा क्योंकि स्पेकुलेटर्स क्योंकि वो काउंटर पार्टी है. तो वो जरूरी है कि जब कोई हेजर हेज करने आए तब उसे दूसरी तरफ वो स्पेकुलेटर मिले ताकि उसके वॉल्यूम्स हो पाए. तो अगर आपने स्पेकुलेटर्स को हटा दिया तो वो वॉल्यूम वो खत्म हो जाता है मार्केट. यूएसडी आईएनआर में प्रिसाइसली ये हुआ. तो इन अप्रैल 24, दिस इज द graph of the premium traded once again in USD INR. This is in crores. Okay, so this is in crores, and so you can see the premium traded pre-April 24. And then the RBI rule came that you're only allowed to hedge in your USD exposure. And since you had to show underlying exposure in USD, to conduct trades, on NSE. Therefore, obviously, speculators got out, and now the volumes have crashed to zero. And even an exporter or an importer with genuine hedging requirements can no longer hedge, क्योंकि वो सब बिल्कुल क्रश हो गया है, सारे वॉल्यूम्स सब कुछ. तो स्पेकुलेटर्स एक बहुत नेसेसरी पार्ट है मार्केट माइक्रो स्ट्रक्चर का. ये काफी लोग, मतलब, a lot of people paint speculators in a negative light, but they're essential for, bid asks to be tight, for the market to be liquid, for hedgers to be able to hedge.
Yeah.
And without the speculators, all of these things go for a toss.
Understood. Now, Mayank, like if we talk from a regulator standpoint, right? They are doing all this to protect the retailer. Key, they are saying, SEBI report is saying 93% traders are losing money. There's a lot of speculation happening. We want to curb this. That's why we are removing. So earlier they removed, like we had everyday expiry, they removed that. Now they removed Bank Nifty weeklies. And now they are saying we'll move Nifty to basically bi-weekly. So now give me some data on this कि जैसे वी आर सेइंग कि 93% लोग इंडिया में लॉस कर रहे हैं. इस कंपेयर दिस विद ग्लोबली एंड विद ओवरऑल अक्रॉस प्रोफेशंस, लाइक व्हाट नंबर्स डू यू सी?
I will just, cover the initial point. I'll extend the initial point that I was covering around the benefits of weekly expiries. And I will continue, go on to answer your question. Okay, तो पहले तो मैंने वो बताया कि किसी फंड के एंटर एग्जिट करने के लिए बहुत ही नेसेसरी है कि डेरिवेटिव सेगमेंट लिक्विड हो. आपका कैश मार्केट एंड डेरिवेटिव मार्केट दोनों इलिक्विड नहीं हो सकता. वो फिर आपने किसी फंड को कोई जरिया ही नहीं दिया कि वो एग्जिट कर पाए. एक बार वो घुस गया तो वो बस फंस गया है. फिर वो बस पकड़ के बैठ सकता है और बस दैट्स इट. ही कैनॉट अवेल द बेनिफिट ऑफ hedging and re-entering at lower levels and avail the entire sort of alpha associated with exiting and entering at lower valuations. He can't avail that. And if you see other geographies, other mature geographies, all geographies have weeklies. They all India's derivative market actually is looked upon somewhat enviously by different mature and developing geographies. तो अगर आप यूएस देखें तो यूएस में एसपीएक्स की डेली एक्सपायरीज हैं, नैस्डैक की डेली एक्सपायरीज हैं, रसल की डेली एक्सपायरीज हैं, उधर स्टॉक्स की भी वीकली एक्सपायरीज हैं. Once again, if you see Kospi has weekly expiries. Euro stocks has daily expiries. You take any Hang Seng has weekly expiries. So Brazil, in fact, now recently has started weekly expiries. So all multiple geographies are moving towards weekly expiries because they want to deepen their derivatives market. And we are moving in the reverse direction. I have a slide on this which I would like to present to the audience. तो ये different geographies हैं एक्स एक्सिस पे, और ये टेनर्स हैं उनके कि रिस्पेक्टिव ईयर्स में क्या क्या उनके टेनर्स थे. तो अगर आप देखेंगे तो इंडिया उल्टा डायरेक्शन में जा रहा है. सारे लोग चाह रहे हैं कि जैसे यहाँ से डेली आ गया, यहाँ पे डेली आ गया यूएस में. यूरो स्टॉक्स ये इनकरेक्ट लिखा हुआ है, डेली है. तो ऐसे हर ज्योग्राफी चाह रही है कि हम डेली की तरफ मूव करें. ये नॉन बेंचमार्क इंडेक्सेस की डॉटेड लाइंस हैं. एसपीएक्स, नैस्डैक, रसल के लिए भी ये डेली हो चुका है. तो और इंडिया उल्टा डायरेक्शन में जा रहा है. तो बेसिकली ये अब बाकी ज्योग्राफीज में तो वीकलीज अवेलेबल है. They are able to offer hedges to the multiple foreign institutional investors, but India will not be able to offer. Now this puts India lower in the pecking order. एंड फर्स्टली तो एक तो पैकिंग ऑर्डर में लोअर आ गया इलिक्विडिटी प्रीमिया की वजह से. दूसरा, आप वो री एंटर भी नहीं कर सकते. एंट्री लेके एग्जिट कर दिया, फिर हेज कर दिया वो. तो एक तो आपका इलिक्विडिटी प्रीमियम और आपका अल्फा भी कम है, तो आप और नीचे आ गए पैकिंग ऑर्डर में वीजा भी अदर ज्योग्राफीज. तो अब अगर कोई फंड मैनेजर एसेट एलोकेट कर रहा है अक्रॉस ज्योग्राफीज, लेट्स से उसके पास तो मल्टीपल ज्योग्राफीज की चॉइस होगी. लेट्स से यूएस, जापान, Hong Kong, China is often accessed via Hong Kong, Kospi, Euro stocks. So he has multiple geographies, and India lags in that regard now. क्योंकि इंडिया में उसको पता है कि अगर मैं एक बार एंटर कर गया तो मेरा निकलना इम्पॉसिबल है. मुझे बहुत स्लोली अक्रॉस मंथ्स निकलना पड़ेगा अगर मुझे निकलना है. डेरिवेटिव्स का क्या हो रहा है कि तो ये पूरा कैपिटल फॉर्मेशन को हार्म करता है. इट हैम्पर्स कैपिटल फॉर्मेशन. एआईएफ्स एंड एसआईएफ्स अब okay, now what has traditionally happened in Indian markets is that derivatives trading, because MFs can't take leverage, derivatives trading has largely stayed with prop desks. and the alpha associated with derivatives trading has largely stayed with prop desks. Up now, SEBI has very rightly in the last, over the last 5-6 years, democratized that access by the launch of AIFs and now very recently SIFs also. SIFs, AIFs की minimum investment amount 1 crore है, SIFs की तो 10 lakhs ही है. So now these funds or whatever, SIF and AIF, they will actively use derivatives. And अब ये डेरिवेटिव्स यूज से जो अल्फा जनरेट करेंगे दैट गेट्स पास्ड ऑन टू द रिटेलर्स, मतलब टू द इंडियन पॉपुलेशन एट लार्ज. सो इमेजिन एक हाई केगर जो एक मल्टीपल अक्रॉस अ मल्टीट्यूड ऑफ पॉपुलेशन डिस्ट्रीब्यूट हो रहा है, दैट हैज सो मेनी पॉजिटिव रिपल इफेक्ट्स, वेरिन आपने एक हाई केगर से आप ग्रो दे पा रहे हो, यू आर गिविंग हायर केगर टू इंडियाज कैपिटल. Imagine the positive butterfly effects of that. कि आप high केगर deliver कर पा रहे हो, और all that goes for a toss in case your derivative segment is not liquid. Then once again that higher alpha is not accessible by the Indian population. Once again आप enter exit नहीं कर सकते, तो वो पूरा गायब हो जाता है. Which is why liquidity is desirable and multiple geographies are moving the direction of providing liquidity. Now I will come to your question, which was your specific question of, and that is the actually the main point of SEBI and FinMin, which is a concern, which is a legitimate concern, कि इंडिया की retail losses बहुत ज्यादा हो रहे हैं. तो if you see FI25 में जो retail losses हुए हैं वो 1,05,000 crores के हुए, 1,05,000 crores. ओके, सो अब ये मेन इशू है, और इस इशू को सेबी को और फिनमिन को स्पेसिफिकली टारगेटेड सर्जिकल मैनर में एड्रेस करना है. दैट इज द वे टू एड्रेस दिस इशू, एंड द वे टू एड्रेस दिस इशू इज इन्वेस्टर सूटेबिलिटी. आप एक बार इन्वेस्टर सूटेबिलिटी लाएं तो ये लॉसेस ऑलरेडी कम होना शुरू हो जाएंगे, इनफैक्ट ऑलरेडी कम हो गए हैं. सो इफ यू कंपेयर the number of retail participants from November 24, when SEBI took a series of measures to curb, options trading activity. From then, the number of retailers has already fallen 37%. I will just show you a slide which I prepared around this. So this is the entire waterfall structure which SEBI or FinMin, can adopt to reduce retail losses. तो सबसे पहली बात तो ऑलरेडी 35% ड्रॉप आ चुका है. 35% ड्रॉप, आई विल एक्सप्लेन हाउ आई अराइव्ड एट दिस पोस्ट द November 24 measures. So I'm talking about retail losses here. So retail losses is a combination of how many retail participants are there and what loss per participant is incurring. उन दोनों का combination है, right? So number of participants has already fallen. If you see NSE market pulse report, I will share that as well. So if you see market, so this is the NSE market pulse report, okay, which is published every month, and it's a very detailed report. I would urge your audience to go through it. So if you see, this is the FNO segment, and this is the monthly trend of participation in the FNO segment, the audience line. This is visible, right?
Yeah.
So this has gone from a peak of 52.6 lakhs. Okay, this is monthly number of participants, 52.6 lakhs in July 24 to 33.4 lakhs in July 25. Okay, अब मैं एक साल का compare कर रहा हूँ. So this encapsulates the November 24 measures effectively, right? Because it fell in the middle. So there's already this is a 37% drop in the number of retail participants who are participating in the FNO space. There's already a 37% drop. Now, if you see this is another sort of, report by SEBI for FI25 losses. FI25 losses. They've compared it quarter on quarter. Okay, now quarter on quarter from Q3 of FI25. Okay, this has got reloaded actually, so we'll just leave that. From Q3 of FI25 to Q4 of FI25, which again sort of is the difference due to the implementation of the November 24 measures, right? Q3 25 to Q4 25. So again, per unit trader, there's been a drop of 8%. So 37% तो number of traders में drop हो गया है, और 8% per trader की loss में drop हो गया है from Q3 to Q4 FY25. तो ये combine करके मैं conservatively बोल रहा हूँ कि just to be conservative throughout. Okay, I am saying that this is, let's say that this is 35% of retail losses कम हो गए, जबकि उससे ज्यादा वैसे कम हुए हैं, but let's say 35% of retail losses कम हो गए. I'll get back to the PPT here. Just a minute. So, so that is what I'm showing here. That 35% of retail losses have already would already have reduced. I don't know whether, on an ongoing basis the losses are being tracked, but if you see the data, if you can see the data, I'm sure there would be ways to see the data. I'm guessing they would have dropped 35%. Plus now, this is till March 25. After that, what has also happened is that Jane Street has left the market. Okay, there's been this entire investigation by SEBI, and Jane Street has been barred from the market. It is allowed, but it's not traded. So that leads to a further reduction in the retail losses. That can maybe add another 5% reduction to the retail losses. So if you see from the measures that have already happened, which is November 24 measures plus the ousting of Jane Street, this already leads to a 40% reduction in losses. So that is what I'm representing here, wherein this sort of left line is the total losses that the retailers are incurring. This already has seen a 35% drop due to SEBI measures. There is again expected to be, once again, I've taken all numbers conservatively, 5% drop due to the ousting of Jane Street and index manipulation not happening. So that will further reduce retail losses. Now I come to the critical part. Okay, if you see, and I will sort of share the relevant thing again. Uh, if you see the breakup of retail losses, you will realize it is overwhelmingly by the less than 5 lakh segment. Now, I'm accessing a report which SEBI had published in FI24. This is the breakup of FI24 losses. So this is the breakup. So total losses you can see is 74,800 crore. Of this, they've given an income wise breakup. 56% are being incurred by the less than 5 lakh segment. And their average loss is 66,000 crores. Now, clearly, firstly, this covers everyone less than 5 lakhs. So the median income here would be maybe, let's say, 4 lakhs. It's not 5 lakhs. The median income would be lower because it contains everyone less than 5 lakhs. So 4 lakhs की median income है. Now the disposable income would be कितना ही उनका बचता होगा. It would be maybe 60-70,000 itself, 4 lakhs के अंदर. And they're losing that much. So it's clearly unaffordable for them to sort of be losing this much. For of the 74,800 crores that were totally lost by retailers in FY24, 56% were lost by less than 5 lakh segment. Now, clearly, it's not suitable for them to be, accessing this segment, especially because they're losing so heavily in it. So, and I will also share another thing with you. If you see the participants, now that is for the losses. Okay, I'm talking about the participants now. This is the total. This is the once again, all of this is public to everyone. This is from SEBI's 2024 report. So if you see the number of participants here, this 76% of the retail participants are less than 5 lakhs. 76%. So and 18% are 5 to 10 lakhs. This is the 18%. So 94% participants are less than 10 lakhs of income. I would like to just emphasize this. 94% of retail traders are less than 10 lakhs of income. And 76% are less than 5 lakhs. This is also, the report also, it's a very detailed report, goes on to show the proportion of loss makers. So if you see with rising income, these are for the prior 2 years, you have to look at FY24. If you see with rising income, actually, traders are getting smarter, except the very high, income traders. They're getting smarter, or maybe they're more informed, they have more resources, they're able to educate themselves. But less than 5 lakhs is the highest if I exclude this segment, which has very limited number of traders anyway. So if I exclude this, so it's not entirely, the lower the data, the less accurate it becomes. So if I see this, the less than 5 lakhs, this has the highest proportion of losses also. Okay, so now, once again, I'll move to the presentation. So now if SEBI simply sort of deems the 5 lakh segment unsuitable for trading the FNO segment, that results in a reduction of retail losses by 56%. So we were from 105,000, 1.05 lakh crores. We've already fallen, from 105 lakhs, 1.05 lakhs. Okay, so from 1.05 lakh crores, we've already fallen to 63,000 crores, right? We've already fallen. And if we remove the less than 5 lakhs segment, then we further fall to 28,000 crores, since they have, they are incurring 56% of the losses.
Yes.
So, and and now, in case you have a qualifier test, like a CFA for trading, etc., which is a tough exam, not like an NISF, but a tough exam, which requires effort, then my guess is it will further fall by 40% because people often, they just want access to the market. They're not willing to put in the effort to learn. If there is an entry barrier to putting in the effort to learn, then I'm guessing 40% people will just not be willing to put in that effort. So that 40% also comes down. So overall, simply by the implementation of a qualifier test, and once again, I think that actually the drop can be higher in case you have a tough exam. You hear stories about vegetable vendors and maybe carpenters or cab drivers accessing FNO markets. Now all of those would get filtered out. By virtue of the qualifying test. The qualifying test serves two purposes. Firstly, it increases the knowledge of the, firstly, only serious participants will give the test, because there's an entry barrier of effort to it. So people who are willing to put in multiple hours of efforts, only they will appear for the test. And I think this drop may be even higher than 40%. I've just again conservatively taken it at 40%. It might be higher than that. Okay, secondly, since the people who enter the market are now more knowledgeable, therefore, the hypothesis and the most likely outcome also is that the loss per trader will drop. I have not accounted for that. I have simply accounted for the 40% drop in the number of people accessing the market due to the tough qualifier test. There might be a drop in the per unit trader loss as well. So if I account for this, you further move from 28,000 crore to 18,600 crores. So, I mean, you and investor suitability is actually the way in which this issue is addressed in other markets. It is via investor suitability. This is an investor suitability issue. So SEBI and India, we've heavily lagged other countries in investor suitability frameworks, which we should be prompt to implement.
Okay. So,
Banning shorter tenors leads to killing the market and is undesirable for overall capital formation and financial growth of India.
so man, basically, you are saying that due to SEBI measures, already the retail losses have come from 1 lakh 5 crore to 68,000 crore. And now, just if we analyze SEBI's report, it says that 76% of the people accessing the FNO markets have less than 5 lakh capital. And these 76% contribute to almost 50% of the losses. So if
56%, exactly.
yes, if we just put basically a number that if you have income bracket is less than 5 lakh, you do not have access to derivatives market. This automatically, because if we were looking at the data, we saw that people with a higher income were generally making lower losses. So that would
Yes.
definitely help the overall market structure. And second is putting a test which is more rigorous so that people actually take this profession or speculation seriously, and the more the educated they are, the lesser the losses will be.
Yeah, so see, there should be space for nuanced views. Let's say there is an IIM professor who feels that India's fall due to tariffs is overdone. And in case US stretches the tariffs for longer, then there'll be inflation locally in the US itself, and ultimately it'll be forced to sort of reverse the tariffs, and India will sort of Nifty will rise as a result. Now, this is a very nuanced view, and he should be able to express it. So it is a hallmark of mature. Like, let's say he might want to let's say sell a weekly call and buy a monthly call. He immediately tariffs will not go, but ultimately they will go. Something of this sort. He should be allowed to express that view. So, uh, mature. Facilitation of the expression of different kinds of views is a hallmark of mature markets, and we should have it as well. If the views are not nuanced, which is being filtered by the tough qualifier test, then that those views, which are sort of actually speculation, which are actually speculation, not they don't come from a place of rationale and logic. Those those traders can be limited, but you don't want a market wherein different participants are unable to express views. So ability to express views is a it should be ability to express nuanced views for people who are knowledgeable is very desirable. Market should have that. So this here also I would like to cover one more thing. So while I've covered retail losses, if you see the number of retail participants, while that is somewhat being covered in the retail losses as well, but if you see the number of retail participants, that was around 80 lakhs in FY24. Okay, this was 80 lakhs. I've just started from here. So since there's been a 37% drop, it's already likely to fall to 50.4 lakh. I had shown right in the NSE market pulse that there's been a 37% drop. So this is for the annum. So it's already likely to fall to 50.4 lakhs. Chain street ousting would have no impact on the number of retail traders. So 50.4 lakh stays intact. Now, if you ban less than 5 lakh income, if you sort of put a investor suitability criteria of less than 5 lakh income, this falls 76%, right? It falls to 12 lakhs. And then if you put a 40% drop, it falls to 7 lakhs. And if the regulators want further reduction, then should this cap be reduced, increased to 10 lakhs, this will drop by 94%, as I had shown, right?
Yes.
94% of the retail. So there are basically India can eat the cake and have it too. It, it's not in a, it's basically the situation doesn't warrant that we forego the benefits of liquidity for addressing retail losses, which is the key issue here. Retail losses are supposed to be addressed by investor suitability frameworks. That is how they are done in different geographies. If you see US has a four-layered investor suitability structure, wherein there's L1, L2, L3, L4 accessing different kinds of risk strategies. L1 can, for instance, I will just show that slide as well.
Yeah. So you're saying this is already implemented in other geographies?
Yeah. So see, retail losses being high is not uncommon in other geographies. What they do is that they have investor suitability frameworks. So if you see tests, okay, so tests are a part of practically all the developed markets. Europe, Japan, Hong Kong, Brazil, Korea. They also typically, a lot now different geographies have a grading structure also that you can only trade FNO after this many years of experience in the after having opened the demat account, after this many years of experienced investing. So you have to show proofs of experience that you have this much experience, and then you are unlocked, let's say, a level that after this much experience you unlock level 1, and after more years of experience you unlock level 2. So that is how it progresses in multiple geographies. There is minimum deposit. So in the US it is 25,000 for frequent intraday trades. Now typically I would believe a lot of retailers are doing intraday trading. So once you have a minimum investment that you have to put aside, then that stops as well. So US has it at 25,000 USD, Korea has it at 15,000 USD. It's a minimum deposit. If you see our other products, right, AIFs, SIFs, they have an auto filter of risk appetite based criteria. So AIFs have a minimum investment of 1 crore, which auto filters basically, I would say it's a risk-based segregation wherein only people who can afford the use of derivatives are allowed access to the AIF segment. So there is a risk-based segregation by virtue of the minimum investment amount itself. A PMS has it at 50 lakhs. Even structured products, which are MLDs, market-linked debentures, have it at 10 lakhs. So in different products, we have this risk-based segregation, but that is not there in FNO, and that is lacking. Now, different geographies implement this for FNO as well, which is where India has thoroughly lagged actually. India has and especially by different brokers like Grow, etc. You can simply open a trading account in 5 minutes. So there is no test, nothing required. You just open the account and start trading, which is why so many you hear of vegetable vendors and cab drivers sort of accessing the FNO market who have no business doing this. Like they don't have the expertise, the viewpoints, the knowledge, the technical know-how, and they are still accessing. So that is not desirable. Once you have this layered structure, now further in US and Brazil, there is a layered structure. So L1, L2, L3, L4 in US. In L1, you can only do covered calls or protective puts. So let's say you have a stock Reliance long. You can sell calls on Reliance against the long that you have, Reliance cash long, or you can buy puts on Reliance against the cash long that you have. Then after some years of experience, you get access to long calls, long puts, and that to covered strategies, wherein you're long a call and say sold a call, which is OTM. So you can do those kind of things. Now, if you want to hit multiple legs, you require risk approval. You require some minimum investment. All those kind of things start coming in, and then यहाँ पे you need to show a certain net worth. So net worth. So basically, it can either be income or net worth. Between the two, now, typically from an implement, you have to think of things from an implementation point of view also. Net worth is tougher to implement because you have to go to a CA and disclose all your assets. People might not be entirely comfortable with that, and then give a certificate to the government. Government has to validate. Income is anyway being done by the ITR, so you can easily just say ki upload your ITR statement, and if it is greater than 5 lakhs, then you have access. Otherwise, you don't have access. So it is from an execution perspective, net worth is tougher, which is why I have not gone into net worth. Even Brazil now, moving from the US to Brazil, even Brazil has a layered structure wherein different levels are unlocked, as you gain experience, and different levels allow you access to different kinds of strategies. So we need this, we need investor suitability, which is heavily lacking, and the retail losses anyway, I've shown how they fall off a cliff by simple implementation of investor suitability measures, and they're already falling. Like from the November, due to the November 24 measures, expiry day, excess ELM, then the lot size increase, the reduction of daily expiries to weekly expiries, all that has already led to a reduction. And basis the investor suitability frameworks, it can further lead to a reduction. We don't need to forego the benefits of liquidity and the AUM at attract. Basically, that is a very good flip to capital formation, liquidity. Because funds then view the geography as attractive, as I was mentioning initially. And it benefits your entire AIF, SIF space also. In the future, India may have in the CAT 3 AIFs, which is the sort of derivatives part of AIFs, you're allowed a leverage of 1:2. Okay. In the future, India may have a CAT 4 AIF. I think it might come sooner rather than later, which are allowed the exposure that a hedge fund is allowed in the US. So now, for that entire segment and capital formation to happen, you need derivatives. Derivatives forms the bedrock of all this, different aspects of capital formation. For the burning issue of retail losses, you should implement investor suitability, which is the way to go.
So, Mayank, you make a valid point that for a healthy market, derivatives also play an equal part, and that makes the geography attractive overall compared to other global geographies. And investor suitability is one of the ways to going forward because that has been implemented across geographies. So, I want to know, like, after this implementation, what has happened in these geographies in terms of retail losses? Because if you look at the context, derivative itself is a business where success rate is very difficult, right? It's very low. So if we
So,
compare this to other geographies, like SEBI's main concern is 90% are losing money. And
So
if we compare
I'm
to
saying,
other
right? So
geographies,
yeah. So firstly, it's 9%, 9% people make money. So 91% are losing money. If you ban less than 5 lakhs, they are the highest proportion of loss
yes,
makers also. So it will further fall to 88%. If you implement the test, it might fall to 80% because they'll become more
yes.
knowledgeable. So there is a very clear path to increasing that number of successful traders. Now, firstly, you have to realize that in any competitive profession, let's say a tennis player or what do you think are the odds of a cricketer making it to the Indian team? Okay, making it to the Indian team or IPL. I'll just move to another slide. So let's say there's a budding cricketer and he starts practicing in the nets, joins some academy. What are his odds of making it to the Indian team? It would be minuscule. It would be far less than 1%, right? How many? Maybe 1 lakh people try, via different. Maybe if I sort of take IPL also into consideration, then maybe 50 players ultimately make a very healthy, livelihood via cricket. So that is a success rate of far less than 1%. Now you don't ban cricket, right? Because of
Yes.
this, you don't ban cricket. Now in IAS, several, how multiple lakh people might be attempting IAS, and only a few thousand or maybe around thousand possibly, get the different ranks: IPS, IAS, IRS. That is again a selection order of far lesser than 1%. But if you see that the attempts of others are getting wasted in terms of their time and effort for the IS exam, then you restrict the number of attempts, right? You don't ban the exam. So basically, the success rate in a majority of competitive professions in the world, wherein which is where trading falls. It's a very competitive profession, and the payouts are lopsided. So if you compare to any competitive profession in the world, take acting for instance. Okay, how many people would try to, would try to break into Bollywood, and how many people end up becoming frontline actors? A very minuscule, maybe 10 bips, 0.1% maybe. So if you see the success rates of different professions, different competitive professions, they are universally less than 1%. IIT, IIM, IES exams all have success rates of 1%. Now we don't ban those exams. Comedy, you will have few examples like Kapil Sharma, Tanmay Bhatt, and a few other names, Zakir Khan, who would be successful. So it's 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 the principle of life that in competitive professions, because the payout is lopsided, therefore only a few will succeed. Against that line, 9% the success rate which is there in trading in India is actually pretty healthy if you compare to different professions. You don't ban movies, you don't ban comedy, you don't ban cricket, you don't ban the exams, you don't ban them because people who are attempting those exams, an IIT aspirant knows when he's attempting that, there's a low likelihood of him getting through. And he wants to attempt nevertheless because the payout is lopsided. Should he get through IIT or should he get through IS, like whatever. So people are aware of that. I have also compared on this slide the percentage of retail loss makers in other geographies. So it is not as if India is an outlier in the number of. I just mentioned that they can, via the different investor suitability measures, drop it to 80% anyway, right? So India is no longer an outlier here, compared to other geographies. People train, most will lose, and survival of the fittest. Some will train themselves to become better than the others, and will reap outsized rewards, just like in other professions. So it's a very normal principle of life that in competitive professions, the top India, number of for retail trading in India, it's pretty healthy at 9%, and can be increased to 15% also maybe by different measures. That is a very, very healthy success rate. If you compare to a lot of the success rates in other professions, that is far, far lower. So this basically, it's not unhealthy as such. Like, people have to train if they can afford it, and they are willing to put in time and effort. Then yeah, I mean, it's not off from, let's say, a cricket. It's not at all off.
Now, you make a valid point, because if we look compare this with other professions and also across geographies, this is what the success rate is. One thing that the regulator can do, which you suggested, is investor suitability. Basically, if we analyze the data, most of the people making losses are within less than 5 lakh group. So we basically do not allow them access to the derivatives markets. They can have access to the cash market. And then we also do some examination, which even basically ensure that only people with knowledge are able to access the market. Other than this, any additional points which you want to cover or you have in your mind, and how this problem that basically the SEBI is also happy, investors are happy, traders are happy, everyone's happy.
So basically, if you have investor suitability, then the ministry's concerns are largely addressed around the retail losses, and it facilitates capital formation in India. Another thing with weeklies is that it allows for cheap hedging, and since the premiums are lower as compared to a monthly, therefore the chances of hedging at high valuations are higher because it's cheaper to hedge via weeklies.
Yes.
Should you feel that there's an event around the corner, let's say there is some war breaking out, or some some state election is there, or some policy is there, or some tariff decision is there, you can cheaply hedge via weeklies. Now that again, I would like to reiterate the first point, and I can't emphasize it now. When you can exit at high valuations, then when the market falls, your NAV does not drop. You have lesser redemptions. You have lesser selling in the cash market. The cash market doesn't fall by as much, so it benefits India. The correction is shallower. And then you have the benefit of re entering at lower valuations. All that you avail in case people are more, people have easy access, or cheaper, are allowed cheaper hedges, which weekly allows people, as opposed to a monthly, wherein the hedging cost would be higher, and therefore they would have to think twice about whether to hedge or not. So that also facilitates the entire, butterfly effect of generating alpha. What also happens is that in case you have a liquid derivatives market, then a lot of foreign trading firms will allocate assets, hire resources, and basically do a lot of activity in your market, right? It leads to additional STT, additional collection for the government. It leads to growth of the brokers also, because that is foreign capital which is deployed in your market. It's giving its benefits of being deployed in the markets to everyone. Okay, so a lot of further what happens is that you have news around that. Like you will have a Bloomberg or a Reuters publish that XYZ had so many traders for this geography. Now it is good marketing basically, for India. And then what happens is that because of this positive tailwind of a spotlight being on India, there are higher FI investments also for the longer term. That is that this all these news, all this attention feeds into higher investments coming into India for the longer term. So those guys might be doing short-term trading or market making or those kind of things. But since that is getting coverage, since that is being covered in the news, the long-term investments also flow into India. So that has positive tailwinds. So all these are benefits, and weekly expiries. It's really required that shorter tenors stay for basically liquidity of the market. The concerns can be addressed via investor suitability, which is the way in which retail concerns are supposed to be addressed. Investor suitability is the framework which um, is the tool, is the vector via which those issues are supposed to be addressed.
So amazing insight shared by you, man. So like if we just compare that investor suitability implemented across globe, and just by removing weeklies is not the solution, because as you said that removing weeklies will make us unpopular. People would not like to basically like FIIs and all would not like prefer India across other geographies. And also a valid point is that weekly, like a liquid weekly market, or a market derivative market which is very liquid, basically allows market crashes also to not sustain for a longer period of time, because there's no one coming to sell who's having a long bigger exposure. As you mentioned that FII itself hold a long, like a good exposure in the Indian markets, but because their exposure is hedged, their NAV does not fall. They
Yeah,
don't
yeah,
have a need to.
exactly. Exactly. In fact, a very interesting case study is Korea. So what happened in Korea is that again, similar issues around retail losses were happening in 2011. So they were ahead of us in the curve. Okay, and retail to prevent the retail losses, what the government did is they introduced a very strict set of curbs on retail investors. From trading options. What happened is that obviously the derivatives trading fell off a cliff, which is expected in case the curbs are very strict. But what happened also is that the Korean equity market stayed flat for a full 11 years or for a full 7 years from 2011 to 2018. It gave zero returns. So that is the capital formation which gets hurt, which I'm talking about.
Yes.
That funds go, it goes against the ease of doing business, right? Which also is against the government policy. You want people to be able to conduct business, or in this case, the business is investments. So you want people to be able to conduct investments. And when you remove the asset of liquidity, the facet of liquidity, then you are preventing the ease of investments within India, which is where there is a problem. So if I go back to the example that I was talking about, between 2011 to 2019, the Korean market were entirely flat, and then the regulators sort of reversed on their measures aggressively to promote the derivatives market. They reversed the measures, but now the derivatives volumes still in Korea haven't come, Kospi specifically haven't come anywhere close to what they were in 2011. So now they are struggling to sort of you know completely revitalize the derivatives market to levels that was there in 2011. So here you see from 2011 to 2019. Meanwhile, India, I think India became 2.5x between 2011 to 2018.
Yes.
So just realize how that affects the different axes along which capital formation happens. The equity market stayed flat.
Agreed. And in fact, if you see whatever the like has happened in last 4 5 years, we have pushed weeklies. In fact, as we mentioned at the start of the conversation, that we are the most, not in terms of volume or contracts, but in terms of contract, we are the most traded markets, and that has happened because there was so much push from the basically from across all the market participants. And if we remove this thing which has basically helped our market thrive, again coming back to this level might take even more years, like what happened in Korea. So that's a very valid point. On a final note, Mayank, like I think I hope SEBI finance ministry takes a note of this, They basically take measures which is already happening in across geographies of investor suitability. Any final points, any closing thoughts on this matter, and anything for the viewers?
No, nothing as such. Basically, liquidity is like the baby, and retail losses are like the bathwater. So you don't throw the baby with the bathwater, is how I would like to conclude it. And that is you basically India is the market structure allows for you to maintain the liquidity and address retail losses. It would have been a different case had retail losses, you know, in case retail losses could only be addressed by shutting shorter tenors. That would have been a different case, but that is not the case. So now, currently, you can address your concern and maintain the positives.
Okay. Thank you, Mayank. Thank you for sharing all your insights and actually sharing with data, and the data point which you mentioned that people with less than 5 lakh crore are actually almost 60 to 70% of the people who are making the losses. And if we bring this to 10 lakh, that is almost 90%. So I
So
think
94% of retail participants have an income of less than 10 lakhs. 94, just like 94%.
of all the losses in the market, 94% comes from the people making less than 10 lakh.
No, 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 no. So 94% of participants who are less than 10 lakhs.
Yes.
The,
Are
the losses proportion is different. They are
okay.
the number of participants.
Okay, Mike. So thank you for sharing all the insights. I hope everyone watching this video will take a note of what the impact of removing a weekly expiry to either a bi-weekly or a monthly can have in the longer uh, term on capital formation and making us less attractive compared to other geographies.
Thank you, Saurabh. Thank you. It's been a pleasure speaking with you.
Thank you.
Thank you.